Thank you. Good afternoon, and thank you for joining us on Chambal Fertilisers and Chemicals Limited Qtr4 FY20 earnings conference call. Today we have with us the senior management represented by Mr. Anil Kapoor, Managing Director, Mr. Gaurav Mathur, Joint Managing Director, Mr. Abhay Baijal, Chief Financial Officer, Mr. V.K. Gupta, Vice President Marketing, Mr. Rajveer Singh, Vice President Legal and Company Secretary, Mr. Anuj Jain, Assistant Vice President Finance. Before we begin, I would like to add that some of the statements to be made in today's discussion may be forward-looking in nature. We'll begin the call with the opening remarks from the management, after which we will have the forum open for interactive Q&A session. I would now request Mr. Kapoor to make his opening remarks. Over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. Welcome to our earnings call post-declaration of results of financial year 1920. I am happy to inform you that the company's performance for the financial year 2019-20 has been very good, and it has been best ever in the history of the company. We sold 3.16 million tons of urea as against 2.54 million tons sold during the previous financial year. The company registered 125% increase in profit after tax, which is rupees 1224 crores as against rupees 545 crores achieved during the previous year. Without considering the one-time deferred tax credit, the net operational profit after tax increased by 61% to rupees 880 crores as compared to rupees 545 crores during the previous year. Our total income increased to rupees 12,385 crores as compared to rupees 10,236 crores for the corresponding period last year. The increase in revenue and profitability is mainly attributed to the production and sales of urea manufactured from a new plant and good performance of our marketed products. Towards the end of the last quarter, the company faced the challenge of COVID-19 pandemic. The company's first priority was towards safety, health and well-being of its workforce. The next priority was to continue operation of all the 3 urea plants. Since we took many proactive steps before and after the lockdown to keep to keep all critical employees within our factory premises, we were able to keep the plants running. I am also happy to inform that till date, all our operations are normal. I will now request all the participants to ask questions which they may have with regards to the result. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment for the questions to be answered. The first question is from the line of Sarang Agarwal from Old Bridge Capital. Please go ahead.
Hello, sir. Good morning. Also, good afternoon. Thank you for your time. Sir, I have a couple of questions. Sir, G3, I noticed that for the year, the G1 and G2 utilizations together have, dropped from maybe 130% in FY19 to almost 105%. So, just wanted to understand why did we see this drop and what are the levels that we are looking in FY21 for G1 and G2?
G1 and G2. Where do you have the production numbers for G1 and G2 for last year?
Hello.
Hello. Baijal, Abhay? G1 and G2 in 18-19 was 21.2 lakh tons, whereas for this year was 19.96.
See, what has happened, I'll just share with you. In the first quarter of last year, we had a problem with one of our reactors in Gadepan 1. That was the reason why this shortfall occurred. We do not anticipate any shortfall in production this year. We should be back to the old times.
Because, sir, yes, please go ahead, sir.
I was saying that in the last quarter, if you see, and even the running quarter, there is no difference. 5.34 versus 5.47. So run rate is the same. So it was only, as Mr. Kapoor said, first quarter issue.
Okay. So because the MFMS data that I picked up, so I was just wondering, one had a hunch that G3 will go for a shutdown in Q4, but we thought that would be made up by G1 and G2. So I was just wondering, how should we look at it? So my sense is that maybe perhaps going forward, we should look at G1, G2 operating at similar levels to FY19, correct?
G1, G2, you should look at what we have produced in the last quarter.
Okay, fair enough, sir.
And G3, as you all are aware, our 100% capacity is at 12.70 lakh tons. And that is what we are allowed to produce.
12.7 or 13.7, sir?
12.7.
Okay.
We are trying for some additional production, like what we get for G1, G2. We are waiting for government approval. The moment that approval comes, we will come back and let you people know.
Okay, sir. So, just wanted to understand, what were your pooled gas pricing for Q4 and what is the current pricing that you're paying?
Rajveer, would you take that question?
Yeah, which one you want, the quarterly price?
Yes, sir.
See, the pool price for March was 11.94 MMBTU per dollar MMBTU per MMBTU on NCV basis.
Okay.
And you know there is a declining trend now, so it should go down. April it was 9.7, the latest one. Pool price I'm telling you.
Okay. So the last question
per MMBTU NCV basis I'm telling you.
Okay. So the last question from my side was on the cash flows. So if I look at H1 FY20, you had almost 1,000 crores of cash flow from operations, whereas the full year and your receivables also seem to have moved up. So just wanted to understand what has happened. Have we not received the subsidy, or our trade receivables other than government subsidy have gone up drastically?
Abhay, would you like to take that question?
Yes, sir, I'll just explain. You are right that in the first half we had a much higher proportion of flow as compared to the second half, and especially in the urea sector, because the urea sector is paid at the moment only till November, whereas the PNK sector has been cleared up to March as we speak, but that was done only in April. Up to March, we were cleared up to December, January as far as PNK was there. But in the first half, there was much better inflow than it was in the second half. As far as the market debtors are concerned, they are completely under control. There is no problem as far as market debtors is concerned. And we continue to maintain very low receivable position in any overdue bucket beyond 15 to 20 days. They are in the low single digits or double digits maximum.
Okay, so whatever negative cash flows happened in operations in the second half is mainly on account of non-receipt of urea subsidy, correct?
Absolutely.
Yes. Yeah.
Okay. And how are the trends looking now?
Trends are good. We anticipate government to give us some more money going forward, and also with the fall in gas prices, that will help our working capital tremendously.
Okay. Thank you so much and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, kindly limit your questions to 2 per participant only. The next question is from the line of Pratik Tholia from Elara Capital. Please go ahead.
Yeah, thanks for the opportunity and good afternoon, sir. Just on this, on the G3 plant, you said that we are allowed to operate only up to 100%, and you said you are working it out with the government. So what exactly are we doing on that front? Because if we have to keep it shut for 1 month every year, that would actually hit our EBITDA quite significantly. So what is the plan that you have, or you and the government is deciding? If you just throw some light on that.
I will not be able to share much on that, excepting that the government is concerned. After all, the material which they get from due to additional production is literally at a lower price than at what they import. So the approval should come through, but we will not be able to commit to you before the approval is in our hand.
But beyond 100%, if we produce, will the government pay us at the same bill allowed?
No. It will be the policy which is governed in Gadepan 1 and 2.
Okay. So that will be IPP plus something.
Yeah. So they have the contribution is not much. The biggest advantage is that we don't then have to go through a shutdown of the plant. The plant continues to operate. So shutdown and startup losses are not there. Maintenance expenditure does not take place. So overall, it's quite a good gain for the company. And for the government, it gets urea which is cheaper than what they are importing.
Okay, got it. Understood. And sir, last time in the COVID-19 call that you done, you spoke about some imports are being delayed because of transportation and logistics issues. So if you could just highlight how the situation right now with the imports, especially for us on the DAP MOP side.
On DAP, I can only share with you the situation as of yesterday.
Right.
Chambal has sold 1.52 lakh tons of DAP till yesterday, day before yesterday, compared to an industry total of about 11.5. So, it's a very good number, and we have enough stocks we have contracted enough quantities. I don't think so that is going to be a challenge for Chambal Fertilisers.
Okay. So the shipments are now frequent?
Pardon me?
So the shipments are now become more frequent?
Yep. We have got quite a few of shipments coming as we speak.
Okay. I think somebody was also trying to make a point from your side.
Okay. Anybody was saying anything from the boardroom?
I think I'm not in the board. Saying that this data is publicly available on MFMS.
That's right. I'm only quoting data which is there in MFMS. So I'm not giving you any new data.
Right. And sir, in the capex, the capex is slightly higher this time around 600 odd crores. I think you had mentioned there were some milestone payments due, which you've taken in this year. So, have all the milestone payments been completed, or some is left which will be coming in FY21?
Abhay, would you like to take that?
Yeah, there is some very minor balance payment due to one of the foreign vendors. That is not marginal, not very much, not of the order what you are talking about.
Okay.
Very marginal.
And so otherwise, our annual capex would be how much for FY21 and FY22?
The annual capex runs at around 80 to 90 crores a year.
82. Okay. Got it. Thanks so much. I'll get back with you.
Thank you.
Thank you. The next question is from the line of Deepak Chitrora from Phillip Capital. Please go ahead.
Yeah, thank you, sir.
Thank you, Deepak.
Yeah, so basically a couple of questions, sir. First of all, on the Gadepan 3, as you mentioned about 1.27 million ton of capacity, the production side. So, what kind of a mechanism are we working on in the similar line as we have for G1 and G2?
For what? For additional capacity?
Yeah, G3 I'm talking about.
That will be on the similar lines of G1 and G2.
I see. Okay. But more or less that has not been finalized yet, or probably that is at the talking stages of now, I guess.
No. The papers in government have moved, and I think the approval should be coming soon.
I see. Okay.
But till the approvals take place, we cannot commit.
Mm-hmm. Okay. And sir, in terms of
and also Deepak, the way you should see fertilizer companies is to see on an annual performance basis, especially for urea industry. Fourth quarter normally for a company like Chambal Fertilizer is a weak quarter. If you see historically, bulk of our sales take place in the first 3 quarters.
Yes.
And performances of fertilizer industry should be looked at an annual basis or in the first 3 quarters. The fourth quarter would be a weak quarter historically and going forward.
Yeah. So, thanks for that, sir. And in terms of future plan, like for example, what is we are basically aiming to do beyond now Gadepan 3 in terms of expansion plans or future plan of action for Chambal as a whole, or probably over say 2 or 3 years down the line?
At this moment, we have got a large debt on our books. If you look at our debt equity, it's still very high. We have to bring down our debt equity. We are in a commodity business. After our debt is to equity has come down to comfortable level, we will look at either some expansion, or we can even go for some acquisition from the market. But that would come after we are comfortable on our balance sheet.
So what's your target in terms of net debt to EBITDA level or total net debt level probably for FY21 or 22?
Our target is that we should come down to a debt equity of approximately 1. And that should happen in a couple of years' time. Am I right, Anuj Jain?
Yes, sir.
So that's the time frame where we look at expansion also.
Sure. So, in terms of trading business now, if I talk about, sir, as I understand, there has not been much change in terms of MRP, but I think in the industry, most of the players have reduced the discounts which they were offering on MRPs. So, do you still believe that obviously there is a couple of reasons behind it because of the rupee dollar, reason. So, do you think in FY21 the margins will be much better compared to last year?
FY21 we should on this front do better than last year, both in quantity and margin.
I see. Okay, so in that additionally, sir, have we started getting any benefit of the cross selling of the traded volumes basically because of Gadepan 3?
Absolutely. Our volumes this year was 9.5 lakh tons compared to approximately, VK Gupta, you may write to Patel, we had sold last year 8 lakh tons last year. And last year we did 8.52, and going forward we should definitely do higher than that. If you see in the last year in the first 4 months, we sold 2.25 lakh tons. So far, up to 23rd, 24th, we have already sold 1.52. So our growth rate is much higher than last year.
Sure.
I can only mention to you what has gone on in the past.
Sure, sir. Sure. And my last question regarding the Gadepantri, the long-term loan which we have taken. So, if I understand it correctly, every year we have to have a payment schedule of around 600 crores or so. Am I correct in that understanding, sir?
Mr. Bajal?
Yes, this is about that amount, little higher, about 700 crores.
I see. Okay. Sure. So, it basically, so if I look at our net borrowing position as on FY20, so I think the major spike which we have seen, that is only due to the short-term borrowings which we have done, mainly due to, I think, the higher volumes which we have got from Gadepantri, I guess.
See, our major short-term borrowing is because of receivable from Government of India.
Yeah.
That's all.
Yeah. So at least, I mean, because we have a larger volume because of Gadepantri, right? That is why our short-term borrowing has increased, correct?
Yes.
Sure. Okay. Thanks, sir.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Madhav Mata from Fidelity Investment. Please go ahead.
Yeah, hi sir, good afternoon. Thank you so much.
Good afternoon, Madhav. Yeah.
Sir, I just wanted to understand that the debt reduction targets which you have spoken about, would it be fair to say that we'll be generating close to 1,100 crores of free cash flow every year in this year and the next year, more or less?
Let's discuss last year. We generated operating profit of 880 crores. There was a depreciation of approximately, Anuj, 280?
Yes, 250, 286.
290, and there would be a tax because this 880 is calculated as book tax, whereas we are on MAT.
Yeah, about 194.
So total cash profit, Anuj, can you mention that? What's the total cash profit we made?
Yeah, I just
And can you also mention the free cash?
973 is the cash profit after tax.
And that number...
No, just hold on. Anuj, we made 880.
Yes, sir.
Plus there is a depreciation of 286.
Yes, sir.
Plus there is a tax, plus there is a benefit because of MAT. So the total works out how much?
Okay, sorry, I'm sorry. 3.36 minus 194. It's about 1,400 crores.
It's around 1,400 crores. And from that, we remove the dividend and we remove the capex.
Yeah.
So the free cash would be approximately 1,100 to 1,150 crores.
Exactly. And going into this year, FY21 and FY22, I think our interest cost also should come down with the LIBOR having come down. Could you give us some sense of how much we could save in the interest this year if LIBOR stays where it is?
Please. I say I'm at home, whereas my team is in the office. Could you please ask the question again and slowly?
Yeah, the savings from the lower LIBOR, there should be some saving on the interest cost for us this year, right? If you could help us with that number, how much could we be saving on that?
Madhav, we should definitely have a saving this year but however, if you look at in the first quarter, the fixation of LIBOR was at 1.45.
Yeah.
The benefit really should accrue going forward because now the LIBOR has come down to 0.38.
0.38, right.
Yeah, so now we should get the benefit in the next 9 months and there will be definitely a lower interest cost this year.
And what was the maybe the average LIBOR for us last year in FY20? How much is it versus the 0.38, I think?
Anuj, would you be able to share what was the average LIBOR last year?
See, I mean, the year started with about 2.3 and in between it was about 1.8. So average can be 1.8 around. 1.8, 1.9.
Okay, sir. Sir, there are no questions.
Okay, thank you.
Thank you. The next question is from the line of Resham Jain from DSP Investment. Please go ahead.
Good afternoon, sir.
Good afternoon, Resham.
Yeah, hi, sir. So, sir, on the overall cash generation which you mentioned, what has happened this year is that the past from the capex, whatever amount need to be paid, the balancing amount, and the increase in working capital has led to debt amount being almost actually slightly higher than what we have seen last year. Going into next year now, and you mentioned that the goal is to repay debt over the next 2 years. And if we just look at the cash generation, is it fair to assume that you will be able to repay like 2,500 odd crores over the next 2 years?
If the subsidy remains as was last year, then in the ballpark we should be able to save 1,800 to 2,000 crores.
Okay. And on, sir, the trading business, other than the P&K business, I think 2-3 years back we were looking agrochemical to be a very promising business. Any thoughts on the same?
See, now we continue to do agrochemicals. That's not a growth area for Chambal right now. A growth area for Chambal is in DAP and MOP. While we'll continue to maintain what we were doing earlier, but that's not our growth area as of right now.
Okay, understood. And so just final question, the recent this locust attack which has been in news, you feel any significant impact of the same on the geography, because we have a larger part in Rajasthan and a bit of UP and those areas. Are you seeing any impact of the same being visible?
I'm aware of this locust attack. It has just come last few days back. But I let my marketing head take that question. GK, would you like to take that?
See, this locust attack has come in 2-3 streams. One is Jaipur side, Jaipur Dosa, which was noticed 2-3 days back. Another is Jhansi side. Good thing is, at this moment there is no fog on the ground. And temperatures are very high. So to that extent, India would be safe to the extent that no crop damage would happen. But they may damage the fruit crops or they may damage the vegetable crops. But this is on the drier part. Bundelkhand is also a dry part of India. Jaipur Dosa side is, Bharatpur side is also dry part. Some are about to enter this Agra side also. And government agencies are taking care. They are aware of it. So not much damage has taken place till now. Had it happened, let's say in August or September, there would have been serious damage. Because then crop must have been in the field.
So, sir, do you feel that in the next 2 months, with the temperature and then the rain, this should be settled? In the sense, it should not be a major cause of worry for us in the next 2 months?
See, at this moment, the worry is more attacks should not come from Iran and Pakistan side. So, government agencies are on alert and they are taking actions against that. Pesticide sprays are taking place. So, they are being contained. We can say this thing, and it's passing downside. I mean, it's not coming up north. It's going towards southeast.
Okay. Thank you very much, sir. Thank you. Yeah, that's it from my side. Thank you.
The next question is in the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir, good afternoon.
Good afternoon, Rohan.
Yeah, hi. So a couple of questions. So first, you mentioned that definitely after 2 years, when you will be more comfortable debt equity ratio, cash flows still will remain very solid and strong, and that can give you an opportunity for some acquisition sort of opportunity. Do you see that in fertilizer business that right now also there are some opportunities, and if that's so, then rather than just looking at the balance sheet size as of now, you will be okay even acquiring if some assets available at a cheaper rate, even in the current scenario, I mean before 2 years also? Or you are very sticky about the balance sheet being leveraged as of now?
If something is very attractive, we will definitely look into it, because that will have we will definitely look then what will happen to our balance sheet, what will be the synergistic effect, and how much cash we can generate from the new business. If something is attractive and we can turn it around, then we would not like to leave that opportunity.
So in that sense, that right now that almost there are 2 to 3 companies definitely facing a lot of stress, including your own group company. So what's the thought process there? I mean, and I believe that with the current pressure capital, couple of companies are only able to do the business, but many of the weak companies are going to lose the business. So do you see that there are opportunities can exist earlier than what we are projecting, and is there any merit in those companies?
If opportunity comes, we will not be found to be wanting. But and those will not be very expensive proposition.
Sure.
In the marketplace, whatever companies may come or they are likely to come in the near future, they are not very expensive.
So when you say the acquisition, I believe that you are looking plants, right? Yeah, plant assets, right?
You can be, there will be plant asset. You never know. Government has also announced that they would like to go through a major disinvestment scheme. So that also we should be, we should keep ourselves free for that also.
Yeah, so this investment, once again, if you look at any of this NFL and RCF and all, they will be only for the plant assets, right? Nothing, no for the marketing or nothing, because you already have a fantastic brand and global, pan-India distribution. So if anything you are looking into just plant assets.
I will not talk specific about companies, because this is not the right forum. But each company has their own brand and own geographies. For example, if you just mentioned, not that RCF has come into picture and we are looking at RCF. So there's an upfront disclaimer on that issue. But RCF's brand is quite strong in, say, Maharashtra or Karnataka. So whereas Chambal brand is not so strong in Maharashtra and Karnataka. So anybody who acquires, say, an RCF, not necessarily Chambal, would like to have that brand also. It's not necessarily an asset sale. It could be a company purchase.
And sir, you just mentioned that going forward, your focus for growth area can include DAP and MOP. And sir, I believe that your company has always been in favor of trading of DAP and MOP, because that's where you believe that the margin lies, and that is leveraging your distribution network. So when you say that growth area DAP and MOP, once again, I mean, you're looking for manufacturing assets and creating or buying in DAP, MOP, or just only trading you are highlighting?
To put it this way, if you look at consumer today, consumer product companies in India, big ones, without taking names, they don't manufacture the product. They get most of the product manufactured from somebody else. Am I right?
Right.
And that's just for, so if I can get the product manufactured by some other company, maybe an Indian company, that would be a good opportunity for Chambal to grow without investing in assets.
Absolutely, sir. That will be very asset-like business model that even nobody is stopping you even to do right now also. So I'm just saying that you were saying that later on in next 2 years, these are your growth area. So I just want to understand that where the potential cash flows of the companies are going to be invested even after 2 years. That's what I just want to.
after 2 years, as I mentioned, there will be definitely some opportunity which will come in acquisition space. Or within the 2 years.
Okay. Fine, sir. So just last question from my side. So, sir, this current scenario and in terms of debt trading, so I just want to understand that what are the debt trading, I mean, your procurement of debt prices, what it is, and how is the market situation? I mean, in terms of logistics issues, are you facing because the season is just kicking in now?
You had asked a number of questions. Let me just tell you slowly. We definitely plan to do volumes higher than last year. Our plan is definitely to do better.
Okay.
We also definitely plan to do better margins than last year. Now, there will be problems in the logistics. But now, for a company like Chambal, our motive is if there are problems in the marketplace, it's an opportunity for good, well-run companies. And well-run companies will always get advantage of that. For example, if there's a logistic issue, some companies will get the business right, who will deliver it to the farmer on time and grab better market share.
Right. Okay, so this is the time for the strong companies to actually gain market share. However, industry volume may remain flat or may come down. You don't want to comment on that?
I cannot comment on industry, but I can only comment on Chambal Fertilisers.
Okay. Great, sir. Thank you so much. Thanks.
Thank you.
Thank you. The next person is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Yes, Ritesh.
Hi, and congratulations on your numbers. Just a couple of quick questions on your calculation on free cash flow. You've added depreciation to operation free cash flow, but wouldn't operation free cash flow already have adjusted for depreciation, and therefore there's a calculation mistake in terms of what the free cash flow is?
I was going by last year's number. We generated operational profit of 880 crores.
Yes.
That is at PAT level.
Which already adjusts for the depreciation.
So then you add back depreciation to that. Then you add back depreciation and add back the tax benefit. We are on MAT.
No, but I'm thinking depreciation has already been added back to reach your operation free cash flow, right? So there's a 500 crore, there's a 50 crore number.
No, I'll let Abhay take that question and explain.
I think, Ritesh, what we are going through is we have said that our operational cash flow was 880. We are taking away the effect of that 322 crores of the tax, deferred tax recycle. Now you add back to that about 280 crores of depreciation. That makes it 1160. And then you see the 50% of the tax is actually cash paid and 50% is basically a deferred tax adjustment, which is non-cash. So 50% of the tax itself is about 200 odd crores. So that is how the 1300 crores which Mr. Kapoor mentioned.
1500 crores, yeah.
But I understand the taxation aspect of it, but I mean depreciation has already been added back while kind of reaching your operation free cash flow, no? If you look at your cash flow statement.
No. Our profit after tax
we were talking about free cash. We were not talking about anything else, and the number will come back to the same.
We can also calculate from profit before tax. If you start from profit before tax, add back the depreciation and reduce the current tax. So
okay, I'll take it offline if that's easier.
I'll take it offline.
The other question was that despite extremely healthy EBITDA numbers and the profit numbers, overall actually net debt has actually increased. You know, so how should we really think of? And I guess a component of it was some of the legacy capex which we paid for this year. But how should we be thinking about this going ahead?
Okay. please understand that the legacy capex itself, which we have shown, is about 640 odd crores.
Yeah.
Okay, and that will fall off. And when we are saying that there was, as far as the cash generation is concerned, we will be remaining at more or less the same level. The only lever that remains is something like what is the further build up in the working capital. Now we assume that last year we did about
gas reducing. No, but what I'm saying is that
two things. One is that the gas prices are
despite of the free cash flow, effectively speaking, even if you add back the 600 crores of like legacy, effectively the capex which we had borne this year, yet there's not been a reasonable amount of deleveraging. In fact, the debt has increased by just over 600 crores, in fact.
Please also factor in that we have repaid debt also, no? 600 odd crores, 600 we have repaid and 482 we have drawn. So there was a drawdown and there was net we have actually repaid out for the long-term cash. We paid almost 440 crores of long-term loans. We also paid some medium-term loans off. So that's where also the utilization of cash happened. So actually, what we are saying is, if you see the numbers of debt equity, they come down to 2.13.
No, but
we are
which is fine. I'm just see if you look at your at the slide you have 13th slide, which is your last slide, and whether you look at like net of borrowing, which has increased by actually 600 crores, or whether you look at borrowing at financials, which has increased by 1100 crores, right? I'm saying that even if we let's say adjust for the 600 crores of capex which we bought this year, we still aren't paying down our overall net debt, despite having an excellent year, has not really reduced.
Yeah, that is because that is the reason being. The reason being our working capital has increased also because of Gadepan 3, our subsidy outstanding has increased. That should stabilize going forward.
Okay. So can we safely? So how much is a safe assumption for the net debt to reduce as of FY20?
The free cash which we generate, assuming the subsidy remains the same, then the free cash which we generate, to that extent, that debt should reduce.
No, but no. So look, I think the concern is that do you expect this subsidy to outstanding to remain actually flat? In which case, free cash flow will.
This is a COVID year. We want to see whatever the government plans. And we are quite confident that they will maintain the subsidy which they have provided for in the budget. So if they do that, then the working capital is also coming down because of the gas prices coming down. So subsidy burden on the government of India will reduce.
Got it. So the reason for the overall increase in like net debt is a combination of your historical, actually, the capex being included and paid for this year, which is all 600 crores, and because your new plant has become operational, your actually working capital has increased, but it's not going to materially increase from here. In fact, let's say it will stay flat or maybe slightly go down. Therefore, the amount of deleveraging which we can do in the current year and the next year going forward will be materially higher. Is that a right assumption?
Theoretically, what you're saying is correct.
Okay, and practically?
Practically, I would like to see on government. Practically, I would like to. I don't want to count my chickens before they hatch.
Okay, but indications are people will continue to pay, or you.
No, I personally believe that we should. Debt burden should reduce this year.
Okay.
All right, thanks. That's all. Thank you.
Thank you. We'll move on to the next question. That is from the line of Ravi Sundaram from Family Investment. Please go ahead.
Yes, Ravi.
Good morning, sir. First of all, hope you're all doing safe. I think a couple of my questions were already covered, more similar to what the previous participant asked. This being a COVID year, some of us, the key question was on the subsidiary receivables for this financial year, which is FY21 from the government. Do you have any view on that as of now?
As of right now, I think government will stand by the commitment which it has made in the budget. I have no reason to doubt because in the first quarter they have met the budgeted numbers.
Okay. My second question was on the recent drop in gas prices. I understand this equation for G3, but how does it work for G1, G2? Any color on that, sir?
Similar. If to that extent, the G1, G2 will on the working capital side will benefit more because they are slightly inefficient plant compared to 3. So there will be a more benefit on working capital in 1 and 2.
Okay. So the $9 per MMBTU that you mentioned, is it for average for all 3 plants or is it?
It's a full price.
Okay.
That's the full price for the entire industry.
Okay. Okay, sir. This makes sense. All the very best for FY21. We'll come back.
Thank you. Thank you, Ravi.
Thank you. The next question is from the line of Sharad Awasthi from Spark Securities. Please go ahead.
Yeah, hi, sir. Sir, regarding the numbers, like in the current quarter, what is the kind of on-the-road movement of fertilizers that we are seeing? Because most companies that we have spoken to seem to have logistic issues. So,
I'll just share with you how much urea we have sold. Right. We have already sold 5, barring what is in transit. And whatever we had an opening stock in this quarter. We don't foresee any problems.
And regarding the new pricing scheme, so are we entitled to get this 500 per ton on the urea plant, on the urea production that we do?
350 rupees for G1 and approximately 250 for G2.
350 and 250. So we are not yet including this in our prices, right?
No, this is already accounted for in the last year's number.
This is getting accounted every year right now.
Yes, yes.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ashok Patel from Financial Research. Please go ahead.
Thank you for taking my question, sir. Can you just enlighten a bit about your debt reduction plans? I just wanted to get a little clarity on that, sir.
I'll let I am a technical guy.
Yeah.
So I'll let the experts answer the other expert.
Yeah.
Would you like to answer that? So, yes, the debt reduction plan, one is driven by the actually agreed repayment amortization. So when I mentioned sometime back, somebody had asked, I said 700 crores will be paid this year. So that is part of that debt reduction anyways. Mm-hmm. The other part of the debt reduction will come courtesy if the government pays on time and we are able to not required to borrow in terms of our short-term borrowing. So these are the only 2 levers. The first has to happen because we have to repay our debts on time. The other part, we are just, as Mr. Kapoor said, we'll count our chickens once they come home. And if things improve after June, I'm sure we will be able to reduce, plus the gas prices which are going down. That will definitely have a salutary effect on the short-term borrowings that we have. So that's how the debt reduction will happen.
So should you assume around 1,000 crores of debt repayment in FY21 and another 1,000 in FY22? Is that the target, sir?
Let's put it this way.
Ideally speaking, it should happen.
700 is done and dusted. Anyways, that we have to pay. That is nothing that's not a choice that we have to pay. Now the 300, 400 that you are talking is definitely possible.
if the government maintains or slightly improves the payment of subsidy, we feel that, with the reduction that we were talking about, at least $1, $1.50, that has a benefit in terms of the reduction in subsidy which the government has to pay itself. So it will stretch a little further. Whatever budget they have, they will stretch a little further.
Two things will happen. I'd like to just intervene. One, our working capital will definitely come down because of gas prices having come down.
Correct.
And two, compared to last year, the DAP prices are also lower.
Okay.
So that will also have an impact on our working capital. MOP prices have substantially reduced compared to last year.
Okay.
So all these three things will definitely have an impact on our working capital.
Oh, thank you so much. Thank you, and all the best.
Thank you.
Thank you. The next person is on the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Thank you. So congratulations on good performance. My question is more on the strategy front. I mean, you have to tread a fine line between growing by acquisitions and maintaining the ratings which are currently quite strong at AA by CRISIL. So, in terms of any acquisition that you plan, how important is to maintain a certain credit rating? That's the only question that I have, sir.
In fact, the target given to Mr. Bajan is that he has to take it to AA+. So I hope that answers the question.
Okay, sir, but acquisition by excessive debt is going to put pressure on the rating. That's why I want to know the size.
No, we will not like to compromise our rating. It's with very great difficulty we have gone up to AA. We would like to further improve our rating, in fact.
Okay, great. Thanks a lot, sir.
We are in a commodity business. This year we are fortunate that with COVID we have been able to manage our operation. But in every company in the world, good commodity companies, they run a very efficient operation as far as the debt equity is concerned. You can look at the balance sheet.
That's right, sir.
Thank you.
Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line Samit Doshi from JPMS. Please go ahead.
Yes, Mr. Doshi.
Yes, sir. Thank you. Couple of questions. You mentioned that the gas prices are down and the DAP prices.
Doshi, I cannot hear you. I think you're on a speakerphone, so your voice is coming a little blurred.
Okay, I'm calling from headset only. Am I better?
Okay. Yeah, better now.
Yeah,
definitely.
Yeah. Okay. So, you mentioned that, the gas prices are down and the DAP prices are down. So, you expect working capital also to reduce. So, can you just broadly give in terms of percentage terms, how much down is the DAP and, the gas? You mentioned 9 point something is the pool price, but as in percentage term, if you can give some idea.
See, gas price for the average for the year, if the crude remains at levels, we should see a gas price reduction between 20 and 30%. And DAP, VK, I'm just asking my market head. What was the VK? Can you just share with us what was the average DAP price purchased last year?
Average DAP price purchased last year. Average price market DAP. We started around $400 TFR India. And it came down as low as to 290.
What was the average? The average was what? 340, 350?
340.
So last year average, Doshi, was 340, 350. This year, we are now at around 315, 320. So you can talk of about 6%, 7 to 8%.
10% down, yeah.
Okay. So approximately we can expect if this situation remains, then probably 800 to 1,000 crore of savings on working capital could happen if this situation remains.
I'll have to do my calculations to check.
Okay, fine. No problem.
Thanks.
So, on the G1 and G2, you mentioned initially that, G3, you are planning to additional approval for the quantity to be produced from 12.7 to higher. So, what is that percentage? Because you mentioned same as G1 and G2, but can you...
Yeah, I'll tell you what we get in case of G1, G2.
Yeah.
G1 and G2, we are reimbursed approximately 2,000 rupees a ton.
Okay,
cross margin.
Okay.
So that's what we should aim to get in Gadepan 3.
Okay. No, I was talking in terms of the higher production. So what would be in terms of percentage, like current capacity is 12.7 is what you are allowed to produce and which you actually have produced despite that 25 days of shutdown.
Approximately 9 to 10%.
Okay, approximately 9 to 10%. So in that case, we don't need to go for maintenance shutdown, etc.
More important is that we don't go through that shutdown because the startup cost
is
we save.
Okay.
And that's quite substantial.
Okay. So one question, of course, our margins have significantly improved, and that is the biggest contribution should be of G3 plant. Would you want to say that what are the other parameters which also improved our margin apart from contribution from G3?
G3 and marketing products.
Okay, you mentioned that share of branded agri inputs have done very well.
Yeah.
So what would be our share of branded agri inputs?
Our share in the marketplace is around 10% in DAP.
Okay.
But in our territory, if you see, in India sells approximately 10 million ton of DAP. We have sold 9.5 lakh tons. So it's a 9 to 10% is what we sell. But we are predominantly a western and a northern company. We don't sell much in south. So in our territory, we have a market share of approximately 14 to 15%.
Okay, fine. And sir, this fertilizer policy, which proposed to ban around 27 types of chemicals, anything that we sell and if at all, what could be, percentage or any impact do you believe in?
I don't think so that will have any significant impact on Chambal Fertilizer because, if you look at from our gross EBITDA to the margins which we make because of agri products like the 27 chemicals which you have just mentioned, it will be very, very minuscule for Chambal. Nothing substantial.
Okay. And sir, you mentioned that last one. You mentioned that we believe that 2021 will have a better volume and margin. So one is of course whatever that lost production of G1, G2 of Q1 19 issue. Another could be this additional approval, if at all, from government comes in. That would be the second reason. So what could be apart from that? What could be other triggers for increase in volume apart from these two?
Volume will be marketed products you have mentioned. We should do better than last year. And
any particular target, like 10% higher or something?
It's not fair to tell you on a call. It's not. I like to keep there's competition also here at this time.
Okay. Fine. Thank you so much, sir. Thank you so much. All the very best.
Thank you.
Thank you. The next question is from the line of Sarang Agarwal from Old Bridge Capital. Please go ahead.
Yes, Sarang.
Just a couple of follow-ups, sir. Once the approval for operating G3 beyond 100% comes through, my sense is there won't be any impediments in pushing these volumes, right?
I agree with you.
Okay. The second is, sir, you spoke about, substantial shutdown and startup costs that the plant has to undertake when it is not operating. Could you give a color in terms of what amount could that be, a ballpark?
10 to 20 crores.
Okay. And, sir, Abhay sir, just wanted to confirm in terms of CAPEX breakup for FY21, what is the milestone, the breakup between milestone and maintenance?
See, bulk of it, our major capex which takes place is in Gadepan 1 and 2. Gadepan 3 is a very, it's a new plant. So we are not going to any capex. Gadepan 1 and 2 is and this is all basically routine capital maintenance. It's an old plant, 94 vintage and 99 vintage. So basically it's a replacement of assets.
So the 100 crore figure that sir
80 to 100 crores. Yeah.
That is mostly for G1 and G2 on a per annum.
Mostly for G1 and G2.
Okay. Great. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Sitroda from Philip Capital. Please go ahead.
Yeah, thanks, Deepak. Yes, sir. A couple of follow-up, if I can. So about this fixed cost of which industry has got a reimbursement of 350 rupees. So the entire amount we have factored in for last year, and there will be no further provisioning on that, right?
So we have already accounted for last year.
Okay.
So we'll continue to account for this year.
Okay. Sure. And the write-off which we have taken around 62 crores about SSP plant and machinery and all. So if I understand it correctly, as of now we don't have anything, any further write-off in that side, because I think we are not contributing.
We have completely cleaned up our books.
Okay. Sure. And same goes with the software business which we had, right?
Yes.
Okay. And lastly, on the new product which has come, especially from the competitors like, for example, IFCO or Crypto, about the neem coating of urea. Of course, I understand it is very early stage to comment on that.
Of urea, we are also doing. Entire industry is doing it.
No, I'm sorry. The nano fertilizer. Sorry, my mistake.
I think let's not talk of competition on nano.
Yeah.
I would not like to discuss nano in an open forum.
No, my point is, what is your view in that? Nano.
I would not like to discuss on an open forum.
Sure. Okay, and that's it from my side, sir. Then.
Thank you.
Thank you. The next question is from the line of Madhav Mada from Fidelity Investment. Please go ahead.
Yes, I just had a quick follow-up. So when we look at doing any sort of M&A in the fertilizer space, could you just give us a sense of what's the synergy, what's the value add that we bring on the table? Is it the ability to run these plants much more efficiently versus the existing people, or what can we do to revive the plant and make it profitable versus what it is right now?
See, three things that Chambal has demonstrated over the years. One is we do capital investment in a most efficient manner than anybody else in the industry. We did this project in flat 32 months, 31 to 32 months, and for us to do such a large project and to run it in the first year of operation at 100% capacity, it's no mean achievement.
Absolutely.
Two, I'm very proud to say that our quality of urea is best in class. You can, in the marketplace, you can check with any of the farmer. I think that Chambal urea is a best in class product. So we know how to run plants, we know how to manage products. On that is the core strength of Chambal Fertilizer. Now, what else do I look for in a new acquisition? What new markets will it give me? In North India, we have got a fair dominance of urea. We are increasing our market share as far as DAP and MOP is concerned. So our next strategy should be to improve our market share in new domains in India where we are absent today.
Okay.
That's what we should look at going forward.
Is there also anything on the efficiency metrics? Because I think Gadepan 3 is one of the most efficient urea plants. It's not globally, at least in India.
No, it is today Gadepan 3, according to KBR, who's a licensor, Kellogg Brown and Root, Gadepan 3 is today the most efficient plant in the world.
Exactly, sir. So this is why I thought that can we also add the efficiency metrics to these plants if we buy out, but because they're legacy assets, it will not be that easy.
No, I agree. We know. See, we should always make investment if there's a payback.
Okay.
There is no point making investment for energy saving and there is no payback.
Got it. No, makes sense. Okay.
It should make financial sense. You will appreciate that.
Absolutely.
Yes. Let's make financial sense. We will definitely invest.
Got it.
Yes.
Okay. Yeah. Thank you so much.
Thank you.
Thank you. The next question is from the line of Siddharth Mehta from Principal India. Please go ahead.
Yes, Mr. Mehta.
Yeah, good afternoon, sir. Sir, my question is on IMACID. If I have to see the IMACID performance in FY20, it has sharply gone down as compared to FY19. Do understand that FY19 was a 15 month. We have considered 15 month in that year. So, how we should look our performance in FY21, or rather, what are the steps that we are taking to make it more profitable?
I think IMACID now will have a slightly better performance than last year. You will appreciate IMACID sells that asset mainly into India, and some of the Indian companies have not done so well. But however, this year should be better for IMACID. And we are also looking at some minor tweaking in by debottlenecking and increasing our capacities in IMACID. But you'll appreciate that IMACID Chambal has 33% share. So it's only 1/3 of the profit which comes into our books.
Correct. And the second question is on our Gadi plant 3. So at what GCal level that particular plant was operating in FY20, and if there is any further scope of efficiency in FY21?
We operated that plant approximately at around 4.9899. Am I right, Abhay?
Yes.
What was the 4? And we should definitely operate better than that this year. It all depends on we do not get some unexpected shutdowns.
Yes.
Every shutdown impacts us by about 0.03, 0.04.
Correct.
So it all depends on that.
Okay, so assuming that the plant continues to operate at 100%, so this 4.98 or 4.99, we cannot
definitely should do better.
That.
Oh, it should be lower.
Okay.
Definitely it should do better.
Okay. So, sir, I know it can be a bit difficult question for you, but if you can just put a range, is there any scope to reduce by like 10 to 15% in couple of years?
10% providing is too much.
Sorry, 0.1. Sorry, sir, 0.1.
0.1 is definitely possible.
Okay. So that is there. Yes, sir. And sir, any change in our IPP number or for the capacity beyond 100% for G1 and G2? Or government is still sticking with the same formula?
See, the government reimburses us a fixed amount, and I do not anticipate that we will not get that amount this year. Well, whatever the way the IPP is ruling, the shipments which have come in this quarter are at around $250 a ton, and with gas prices dropping, we should be able to get the margin which the government allows us to make.
Okay, sir. So thank you and best wishes for upcoming quarters.
Thank you.
Thank you. The next question is from the line of Ravi Chandra from Family Investment. Please go ahead.
Yes, Ravi.
Sir, thanks for the follow-up. I just have one clarification. You had mentioned that there is a restriction, not a restriction, a guideline not to produce beyond 12.7 MT for OG3. But we are a net urea importing country. Just a general question, not probably on your business. What is the rationale, or that's for us to understand, to limit?
The limit has been set because that's a sort of a reimbursement to the company for the capex which we go through. So that's why the margins are very high. Not very high, the margins are reasonably high so that we can make money and repay our loans. And government had then set up the number 100% at 12.70. That was the logic for setting up the number.
Sir, if you can operate a little more, you will actually be able to repay a little faster, right, by that logic.
The government will allow us most probably, let's wait for the policy, but not at the same level of margins what they would allow up to 100%.
Oh, okay. Okay. So margins, if at all,
up to 100%, the government is more or less committed to give us the margin.
Okay.
Okay. Beyond 100%, the margins would definitely come down.
Okay, sir. Thank you.
Thank you.